Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for the 4th of February. It is the day after the Super Bowl. It is a Monday, and we just kind of kept on keeping on here today as buyers continue to overall work their way into the markets. Big company. You may have heard of Google coming out with earnings here tonight after the close. Looks like, and it just a kind of a first glance, did not have time to dig, but looks like an earnings and a revenue beat. Google was down around 2% in the early after-hour market, as I think folks are kind of starting to digest that earnings report. So it should be interesting to see how that impacts us going into tomorrow. Good afternoon, Whitney, and good afternoon, everybody else. As always, guys, it's my pleasure. It's always great to see you guys, and hope everyone had a great day both in and out of the market. While Google will get the headlines, right? We're used to that. The big name companies get the headlines. They get the attention. Still plenty of earnings coming out before tomorrow's open as well. Gilead Sciences. We have Seagate Technology. They can move. Mosaic company coming out here tonight. And tomorrow before the market open, we've got a handful as well, including BDX and Estee Lauder. So definitely some interesting names to be combing through tomorrow morning, bright and early. So, and hello, Patricia. Hope you are doing well. So, pretty interesting day as we really just kind of continued the momentum that we built last week, second half of last week. Overall, here we are on the S&P 500 on the intraday. Went sideways early, trying to pick a side, back and forth for an hour or so, and then we just kind of kept grinding. Had a nice little pop at the end of the day as well. So closing it on a high note for the most part across the board, certainly in the S&P 500, as the bulls really just kind of continue to maintain a pretty good control on things right now. As we look at the S&P from a daily perspective, we don't really have a bunch above us. We've talked a lot about this. You guys can see it on your own. We are working into a flat 200 period moving average, which I think is something worth monitoring. That's going to put us right around 2740. Again, as we've talked many times, a flat average doesn't scare me as much as a rising or a falling average. But when there's really nothing there until, pretty much our, next, our, major resistance. And in my mind, that is a major level of resistance. That should be a heck of a fight if we get there. I do think we can kind of keep an eye on that 200, whether that's a profit-taking zone, maybe we push right through it. I do think it's probably in our best interest to just monitor it, see how it behaves over there. Tech really leading the charge here today. NASDAQ had a solid day, because of it. And we are getting closer. We've been kind of looking at, once we had our break here at that 7,000 is kind of the first psychological number. Right above that, about 725 or 7025 or so is our 200. Can be an area that I think we should keep our eyes on. Again, much like the S&P 500, not a lot until we work in towards some of these highs. But 7,000 is a big round number. And, a lot of traders do look at those numbers. I might be one of them. So, I will be at least thinking it's a psychological level of resistance, potentially, if nothing else. But all signs continue to be bullish, in my mind at least, in the NASDAQ as well. Tech does continue to be overall probably my favorite area right now, just because of how strong industrials performed today. So over in the Dow, much like the rest of the market, pushed through. We're kind of bumping our nose right into that last potential trend line that we've seen all of the other indexes be able to take theirs out. You could maybe argue we are closed right above it, right below it, but we're kind of hanging out in that ballpark. Again, not a whole lot to see here. Another just good day for the bulls as we just continue to operate with that momentum. Russell, which of course, as we've talked, has been one of the chart that I've liked maybe the most. Neck and neck maybe with the NASDAQ, but certainly I like the Russell chart. It continues to work forward. Now we're approaching around that 1540 to 1550, an area that I'll be keeping a close eye on myself. I would expect that to be a little bit of a challenge, but I would expect that we're going to be able to continue to work into that range. Anything can happen, of course, but there's no real technical catalyst that I can find that would not make me believe that that's where we're headed. So a little more room to run over in the Russell as well. It's really the bulls just kind of continue to have a stranglehold on things right now. And good afternoon, Angie. Great to see you. I hope you had a fantastic weekend, enjoyed the Super Bowl or the commercials or the nap that you got during the Super Bowl, whatever it might have been. I think a lot of people napped through the Super Bowl. I didn't think it was bad as everybody else did, but I'm a pretty big football nerd, so any football is good football as far as I'm concerned. So as we kind of shift into our sectors, we just continue to bounce a little back and forth, a little indecisive, not loving that, not hating it, but not loving the lack of conviction in material sector. Again, big part of it, in my opinion, at least, is this, the struggling of DWDP, which, is a major name within this sector, whatever the reasons are. That can't be probably the only one. It's not like it's Facebook in the communication services sector. It's just having a hard time really generating that buzz, that momentum, as we're seeing the money come into industrials, into tech, into the communication services, into some other areas. Now, it hasn't done anything wrong. And I think it's important to note, at least for myself, that it hasn't done anything wrong or generated any signals or anything like that. But it's just having a hard time keeping up with the rest of the market, which, that's not necessarily a bad thing. Let some of these other areas run into resistance, and then we can maybe break out over here in the materials, right? It's okay to stagger it, certainly. I do think that we can continue to use this 52 handle as our support level, and at least until something new does develop, I don't think I will be bearish in this sector until I see that, at least broadly speaking. That puts us at a swing low, that puts us at our moving averages, that puts us using this old downward trend line as a potential support zone. Just doesn't want to seem to get going. Watch it make a big move tomorrow, right? Just when you kind of complain that it's not moving. Over in energy, we are bumping right into this old support zone at $65. I guess it's probably going to depend on you. Like I said on Friday, I've got to be sold. I am very interested. We're seeing a lot of movement and some decent earnings in some of these energy companies. Seasonality suggests that energy can have a nice month or two going into into February and March. So I am very interested from a bullish point of view. With all of that said, until I am sold, and I'm not sold today, that old support zone has been broken, and I'm not yet. You guys know me. I'm not afraid to be very, very sure. I'm not comfortable from a bullish point of view. I understand where the bulls are coming from, maybe super aggressively. I mean, hey, we did close above 65. Not enough for me. I'll want to see a nice clean close above that old price point. Everybody's looking at that. Just some people are wimpier than others, right? I usually find myself on the wimpy side of every spectrum, although not every time. Not on breakouts, apparently. I had to tell some of the other coaches I called them cowards in the market recap because they vetoed one of my breakouts. So saying it was too extended, but that's okay. I'm all right with that. So continue to watch how we operate here. Again, if you are interested in this, in this area, probably not a bad time to kind of be prepping it, whether or not you think it's cleanly broken just yet. We want to be ready, right? Whatever that might mean to us individually. But do keep an eye on that price range. That has been a lot of history there. We've all seen it together, no doubt about that. Over in financials, just finally able to, get a little momentum on Friday and here going into today, pushing through that 26. It's really been a little bit of a consolidation zone for us. We do have, if I'm in financials right now, I'm comfortable with where I'm at. If overall I'm looking at new trades, I'm personally going to want to be taking out that 25.50. We, kind of out of the frying pan into the fire on this one, breaking through that 26, definitely in my mind, a bullish signal, but a major support zone at 26.50 in days gone by. That can, of course, act as resistance. For new entries, I think letting that clear is the way I would be looking at it. Existing trades, I'm okay with that. I'll obviously monitor it there, no doubt about that. If we can push through that, and this is why I think patience is fine. I always think patience is fine. If we can push through this will all of a sudden, to me, be one of those areas that, like tech and industrials right now, that really have room to run. Materials too, although they haven't ran, have some upside without a lot in their way. So I do, do continue to like this. We'll like it a little bit more if we can take out some of these resistance zones that put us at 2650. Industrials really cooking, really cooking. Big day today. I believe just behind tech, up over 1.25%, working very close to our first test. Right, we've filled up that space very quickly, probably faster than I expected it at least. We are knocking on the door of that 200. This is an old support, old resistance zone. Again, am I bearish because of that? No. Do I still like this area? Absolutely. But I kind of want to mentally prepare for, maybe a consolidation period, maybe a pullback as I run into that area, whatever that might mean. Maybe it's scale out of the trade, close the trade, sell some contracts, just not be a wimp and hang out and let it pull back, whatever it might be. It continues to show a lot of strength. And so I do overall like it, but we've about filled up that first level of space that we had that nice nothing in the way, right? So we're about to get a little bit of a challenge over in the industrial sector. It looks like we will see where that one takes us. Breaking above that, just another bull signal to me. So, and it may or may not, right? We see it, and you've worked with me long enough to know that I look at levels of resistance, I think about them, but they don't always knock us down, right? It's only resistance if it holds, as they say. So it should be a little bit of a challenge, but a lot of strength over industrials right now, no doubt. Same deal, at least in regards to strength, over in the technology sector. Again, an area that we've been enjoying over here in the recap this last little bit. Still quite a bit of room. Unlike industrials, who are at least working into a challenge, however big of a challenge you may think that is, I think we would all agree that it is a potential challenge zone. We've got some room over in the tech sector still. That's going to put us in the, in the low mid 69s, as that, basically our 200 is lining up very nicely with our previous resistance pivot high here. So still some room to go. Now, do I expect it to get up there without having any consolidation or pullbacks? No, but I never do. That doesn't mean it won't, right? Still plenty of room, and that is certainly what I'm eyeballing in the tech sector. A lot of room to the upside still, in my mind at least, on a lot of these tech stocks. So definitely liking that area. Over in the staples, a little bit of a bounce back day off of yesterday's. Again, I'm not a huge fan, and I won't be a huge fan probably this week. We do have some buy signals, so I'm not going to put up a huge fight if you find yourself more bullish than I do in the staples sector. We've put in higher highs and higher lows above our moving averages. Recently broke out on a pretty good candle. You guys know me, 54 scaring the heck out of me. At least in the short term, I will expect that to act as a resistance zone, and it will need to take that out to get me comfortable. Probably wouldn't jump in the day that it broke that, but I'd probably start to feel a little more comfortable. Still seems like a messier area for me, at least. I do see the bull signals. What we're seeing in the ETF, and so I certainly will not, will show them the respect that they deserve, but not an area that I'm really liking still. As we move into the utilities, this one's been an interesting battle. We've of course, watched it run up into that trend line, last week, bounce back and forth between it and the 50 on Friday. Very close to doing the same thing here today. We did put in a lower high and a lower low today than we did on Friday. So, top to candle bottom, top to bottom on the candle, it was a lower high and lower low day. Really a good, bounce back off of the lows as it kind of came off of the 9 exponential moving average. I don't mind the idea of a break on utilities. This first test, it's going to have to break through that. But the nice thing is, if we can break this 55, could be something I could, be swayed to like a little bit. We will see. Again, as I said last week, until it's above 55, it's going to have to do whatever it wants to do without me. So I think whether you're looking at this trend line, looking at the history back at the $55 area, there's enough compelling reasons to believe that that is a potential resistance zone. Probably not the best place, if you believe that, at least buying at resistance is not the best idea from a trading perspective. I think we'd all agree with that. So keep an eye on 55. Been an interesting battle so far. Ran up to it like nothing. Sold off big on the intraday on Friday, only to rally back pretty strong off the intraday lows. Very similar here today as well. So it should be it's an interesting one. I don't know how practical it is for me in the next couple of days, but it's kind of been fun watching it. Now, over in healthcare, still a lot of healthcare companies with earnings. I think we have 11 S&P 500 companies that are reporting, healthcare companies that are reporting this week. Been a little bit of a mixed bag, seen some good, seen some bad. So I still think, we're going to have to kind of get through this week to get to fully digest what this earnings season means for healthcare as a whole. As we look at the price action here today, really sold off early and then basically fought back all day long. If we go into a 15-minute time frame, as we went into our open here today, there's our opening candle, big sell-off. First hour, it was looking pretty grim over in healthcare. Really fought our way back very, very nicely throughout the rest of the day to kind of close back on the right side of that 90 mark, that breakout point that they had put in on Thursday. I think at this point in time, again, we know these earnings can have a big impact. No singular company is probably going to impact this the way that Facebook can impact, the communication services, or Amazon can impact the discretionary sector. But these names definitely can push it one way or the other. Really, I really think to be comfortable, you let these things play out. If you're liking where you're at, I certainly get it. We're making higher highs and higher lows. We have some room to operate. So certainly, overall, technically, the bullish signals are still there. If you are a big wimp and want to see some of these earnings, kind of shake out, I would understand. So been a little bit of a mixed bag so far. Not really great, not really terrible. Maybe after we work through the 11 that are coming out this week, we'll have a better idea of where we are going within this sector. But technically, still looks very strong. Even off of today, buyers are saying, "Hey, let's get in on this thing. It's a good deal," even though it breached some intraday support. Right, jumped in pretty happily. So definitely still showing that strength. Still have some room to go. And that's always a big selling point to me. Right. Speaking of discretionary, a little bit of a bounce back day here today after, having a pretty rough go of it on Friday, in part at least due to Amazon's, reaction to the earnings report. As we kind of talked on Friday, it's not impossible, but it's difficult for this ETF to really move to the upside if Amazon is moving to the downside. It's a difficult task. It probably is going to need Amazon to kind of shake itself out a little bit before overall it kind of picks up that momentum. At least that's kind of the way I'm going to be approaching it, right or wrong. That will be the way that I'm approaching the ETF over in the discretionary sector. Charts are a little weird over there, no doubt about it. So maybe this pullback, or a consolidation period wouldn't be a bad thing from a technical point of view. So maybe Amazon, kind of putting a little, cold water on the bull run will end up being a good thing, late this week or early next week. A little bit of a pullback, a little bit of a consolidation period might help kind of pretty up some of those charts in the discretionary sector. Really, the numbers are, to me, are the same. We're continuing to look at 105 kind of as the short-term support zone, and 110 is our short-term resistance zone. So those are the kind of two numbers I'll be looking at in the shorter term. Overall, again, the bullish signs are still overall there. Not seeing a ton of sell signals develop, at least as of this moment within the sector. Just, having a hard time, coming to terms with the market's initial reaction to Amazon, at least. Over in real estate, it seems just like on Friday, it seems like it wants to pull back. We know it's extended. We know it's at 3450 area is a old resistance zone. That's last time we got to 3450, we tanked, right? It's a big, we've got big history there, right? Just by that virtue of that one time. And it looks like it wants to pull back. It sells off on the intraday, but then we see these long tails as buyers come hopping right back into it because it's been strong. There's no doubt about it. I get it why someone would want to buy what they considered a sweet deal, on an intraday pullback within this sector right now. It's been very strong. Right now, pulling back might not be in the cards. Maybe we're going to need to do this for a little bit, consolidate, and then break to the upside. I'm not sure right now. I don't want to be buying it, at resistance. I want to make sure I cleanly break. If anything else, I was hoping to get a pullback. Still might, right? We might get it. But the last 2 days of price action really, kind of are showing us that right now, at least, traders are basically looking for an excuse. to buy in. Oh, it sold off a little bit on the intraday. Let's get some. And so that continues to show good strength, but it doesn't necessarily make beautiful charts, and that's the downside there. So continue to monitor how it handles this 3450 zone. Definitely been an area that's had an impact in the past. Above that, really until 35, probably, if we do take out 3450, I do expect 35 to not be that big of a deal to reach personally, but we're not there yet. And over in communication services, continuing on last week's momentum cleanly, of course, depending on who you were, we may have broken out of that trend before Facebook earnings, but no matter who you are, we broke out of it after, right? So we continue to show good, solid strength. Now, Google, again, big, just like Facebook, it is a huge component of this ETF. Same deal with Google. Both classes of shares of Google are in this ETF. So let's see how this Google report impacts it. It can one way or the other. If we don't see a dramatic move on Google, then it's probably not going to see something as crazy as this. But keep in mind that when you're that heavy, in one of these ETFs, you alone can make it happen. So I expect we'll have to see where we are when we meet tomorrow. Because really, right now, I don't really know that there's any great reason in my mind to talk technicals on this ETF, because Google's earnings are going to impact it, significantly one way or another. The question is it dramatic or just significant? So we will see tomorrow, no doubt. So really just kind of continuing our momentum for the most part, as you can see across the board here in the market. And that's a good thing, pretty well behaved for the most part. Yeah, you're seeing a little back and forth over materials. And to be honest with you, I did think we were going to see it something looking closer to industrials and tech than the sideways damps that we've seen in the material sector. But again, just because I want it to happen quickly doesn't mean it has to, doesn't mean it's done anything wrong. I might be thankful by Friday when everything is overextended except the material sector. So, that's not necessarily a bad thing, but really just a little bit more of the same as the bulls continue to stay very much in control of things. As we take a quick peek at the VIX, again, continuing to see it work its way down. As well, we can kind of see just by looking at the charts that we follow on a daily basis, that volatility has definitely been working its way out of the market, right? Traders, short's been bullish, and that usually, stock market's up, VIX is down, vice versa. But it's also, not been the volatile. December seems like a long time ago, but those were some big old candles we were seeing in our individual stocks, in our indexes. So volatility definitely continues to work its way down. Over in the dollar, little bit of upward movement off of that 200, kind of continuing off of the momentum that we built on Friday. For me, again, boring. I am neutral. Only thing that ever changes, and it doesn't really impact anything because it doesn't. I'm not doing anything one way or the other as I look at this chart. Am I neutral with a little skew to the bull or to the bear? Right now, as long as we're below the 96. I will kind of stay a little skewed, to the bear overall, although I wouldn't be surprised if we are able to at least work into that 96, old support zone and test that in the days to come. So if you are looking at from a bullish point of view above 96, I could understand if some folks would call that a bullish signal. I would argue that 96.50 have to call resistance. So I don't really know that there's a ton of room to operate there. But I would understand. And that's not happened yet. We're not there yet. We are making lower highs and lower lows on our daily chart. So I still think overall neutrality is the best way to be looking at it, at least from a daily chart perspective. So metals are pulling back. As gold and silver definitely had some pullback days. Not terribly shocking. I mean, like we talked last week when we kind of hit our high point. We'd almost filled up half of the space, 3 days into the breakout, 4 days into the breakout at the intraday high. And that probably isn't, going to happen. Realistically, anything can happen, but we were very extended to the upside. We did need a little bit of a pullback from a technical point of view. Above 13, definitely going to stay on the bullish side of things. A pullback into that general ballpark, I think could be a very interesting potential entry point. We may not get that deep of a pullback, but if we do, that could definitely be something I'd be interested in. Right now, though, wherever we're at, looks to me like we are kind of in the early stages of a bullish pullback. We do have a lot of strength, so always remember when we have strong trends, whether it's bullish or bearish, just like we saw on real estate, it's very easy to look for an excuse as traders. Maybe not specifically the way I trade or the way that you trade, but this has been hot, and I imagine a lot of people feel bad that they missed out along the way. I should have bought it whenever, right? So I'm not going to be surprised if it's one of those fast turnarounds, either because of the overall strength. But at least as of today, looks like we're in the pullback phase within gold. Over in silver, definitely a lot of selling, but ended up actually putting together a pretty nice little hammer candlestick here, coming off of the low around the 20-period moving average, around this old, this was an old zone that we were keeping an eye on as resistance, right? Definitely catching its footing nicely there. Pretty big hammer candlestick, a lot of momentum going into the close. A little more upward movement. I could understand why folks might like that. At this point in time, I still think, would like to see that pull back a little bit, more developed than, two candles. But definitely, regardless of my opinion, I mean, that is a pretty nice bounce back. I mean, remember that when you see these long tails, at what point today, this was a giant red candle, looking a lot like this guy right here. So somebody said, nope, not anymore. Bye, 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 right? So definitely a lot of momentum going into close the day. 16 does continue to be kind of that psychological number, I think. And for me, would like to see if I do wanted to move into the pullback up, off of some upward movement as early as tomorrow. I'd probably like to wait for it to be above 16. But again, that's just me, and I know that not everybody's going to look at it that way. Nice development on the candle, though. Natty gas continues to fall, so we kind of didn't have anything too crazy, over the weekend, at least by natural gas standards, continuing to work down. Interestingly enough, we're, hanging out, and you could argue, and I think I probably would, that we're, a little bit below this support zone right here, and there's not a lot for a while. I mean, we are the next time we get to this 2.5, that's going to be a major support zone that maybe we can have an honest trading discussion about. We'll have to see how volatile it is if and when we get there. That's a big one. We've been there a lot. Nice round number. But as you can see, just looking at, the price action last summer and fall, we've really bounced and responded off of 250 or approximately 250. Not really a lot. We have this little swing right here. I think you could argue we closed below that here today. Not a lot to hold this thing up until 250. So while I still think it's a difficult area from a trader's perspective, I do think that signs do continue to point to the bearish side right now. 250 should be a fun one. That's going to be an interesting one. Maybe we'll see. Maybe I'm not going to hold my breath, as I've said many times, but maybe there could be a setup there. We will have to wait and see. Doesn't look like we have a lot of support from where we currently are to where that support zone is, though. And again, it's just one day close of a swing support, but not really much between here and there. So not going to be terribly surprised if we do continue to work down into that 250 range throughout the next week or so. So still don't think this is a tradable area right now. With all of that said, so you may disagree, and that's okay. I've not been very active with natural gas, but one day, and this is the thing, one day there will be a really good setup that I like, that you like, and taking 1 minute of our life to look at natural gas every day. It probably doesn't even need to be that, right? We just like to, I just don't want to completely ignore it. So one of these days, though, over in crude, we weren't able to build off of Friday's close. Friday, of course, we did close above 55 for the first time. We worked in towards that high from from Friday here today, acted as resistance and really pushed us back down, closing below 50, below the 55 mark. At this point in time, if I'm looking at this from a bullish point of view, and I am interested in buying into the break above 55, I think right now we're using these intraday highs as the bare minimum takeout, and that's going to put us at 55.30. I'm sorry, 55.37. Is that right? Nope, 55.66. So breaking above that could be a kind of that confirmation signal to the breakout side. going to have to let this one shake out a little bit. Still seems like it wants to break 55. We did break it once, but we are below it here today. And hey, Edita, how are you? Good to see you. I hope you had a great day. So there's still a potential trading opportunity to the upside, I believe, at least over in the crude market. I think taking out these little highs and maybe even consolidating for a day or two would be a nice little entry point if we're able to get that. But knowing that we've seen those 2 days, and again, it's just 2 days, but it's something, right, of some intraday resistance, that is a potential entry point. I could understand if someone was looking at it from that point of view. Not there yet, may not get there. Obviously, not everyone's going to want to trade it there. That's up to us all to decide for ourselves. But I think for me, at least, that's that kind of that first signal that that you can get into this, at least for me. So that's going to do it, ladies and gentlemen, on a fairly interesting day. Metals pulling back. The crude not able to maintain. So seeing a little bit of interesting stuff going on over in the commodities market. Stock market behaving pretty nicely, just continuing to build off of those signals that have been building, for several weeks, kind of one at a time as of late. So continues to be pretty well behaved. We still do, as you saw, we still have plenty of earnings. This isn't as heavy of a week as last week was. We are out of the heaviest, portion of earnings season, but still plenty on the docket this week. So of course, keep an eye on those. Make sure you are double checking all of the, your trades that you're in, the new trades that you're making, just to make sure there's no crazy earning surprises that can get the better of you. After this week, again, there will still be stragglers. There's always somebody reporting earnings, right? But really, earnings season will kind of be behind us for the most part once we finish this week up. So should be another fun week in the market, as always. So with that, ladies and gentlemen, as always, it is certainly my pleasure, and it's great to see you guys. I appreciate everybody's time. If you are new around here, be sure to subscribe to the channel and hit that notification bell so you can be alerted to any new videos that we've got going on over here. And be sure to join us over at Tackle Trading on Twitter as well to keep up with some of the things that we're running into throughout the course of the day. That's the easiest way for us to, hey, that's really interesting. How do we get it out to our team? That's the easiest way that I can come up with, at least, to share. Oh, that's neat. I want to follow that with the team. Maybe you guys aren't as interested in it as we are, and that's okay. Ideas are just that, right? There's no bad way to get an idea. So be sure to join us over there. And if you'd like, you can always find me at FrankMartin23 on Twitter. If you want to come hang out with me, or if you need me to get you added to our Team Tackle list, it would certainly be my pleasure to do so. Just let me know. You guys know me. I'm never too far away. I'm not that hard to find. So with that, ladies and gentlemen, if you do enjoy the market recap, it is helpful and appreciated if you do give it a thumbs up. So thank you in advance for that. Get the heck out of here. Enjoy your Monday evening, and be ready to rock and roll tomorrow. And I will see you then. Good night, everybody.